Tell us what's happening on the financial landscape that church leaders, especially stewardship and executive pastors, need to be paying attention to.
I think before we jump into what's happening today, let's put it in context by looking back at where we've been. Now, for the last 14 years, since the Great Recession and in 2008 and 9, we've been at across the board historically low interest rates, inflation rates, unemployment rates. The stock market is up by over 450%.
Hmm.
Charitable giving has increased by right at a third, from $330 billion to $484 billion. And so there's been a lot of good news that's happening on the macro level. Yes, we've had some minor ups and downs, but as we look at this in broad terms, it's been really the best of times. On a negative basis, there has been a fairly significant shift in wealth from the bottom 90% to the upper 10%. Really, that was happening in the 90s and early 2000s. And since 2012, with the change in the estate planning and then the tax cuts for high income earners, the concentration has been going to the upper 1%. So there's been about a 20% shift, and that's it's not talked about very much. But it really does impact us in the way that we look at generosity today, because it has impacted not only where giving is coming from, but who is participating in that. So back to the economy. What's the same as this been? Well, unemployment remains really high. Only 3.6% unemployment, and that's part of what is driving the action of inflation fighting that the Fed is doing, which is causing some disruptions that we are going to need to be aware of.
Hmm.
Now, you hear a lot about the stock market, and it is true that the stock market is down 14% since the beginning of the year. There was this peak where we were really going up last year. But if we think about where we sit right now, we're about the same place we were as in March of 2021, which was a record high. We all thought it was awesome back then. And that's where we are today. Keeping that in perspective, it's still increased 30%. Where we are today is 30% higher than we were in March of 2020. So, folks are concerned about the stock market, but if people have been in the market for a while, certainly over the last 14 years, there's been much, much, much more good news than bad news, and their giving has not kept up with the increase in the stock market. So on the negative side, we've seen interest rates jump on the short end of the yield curve, meaning short-term borrowing. That's up about 175 basis points, or 1.75%. That's when you hear that the Federal Reserve is raising interest rates. That's what they're doing. The impact of really not so much raising interest rates, but the concern for inflation, is that long borrowing and the 30-year, like for a mortgage, is up about 3%, which is really squeezing people's ability to purchase homes, which are at pretty high levels. And that gets us to the big thing that's going on, and that's inflation. They just released the June numbers today, and again, a record high that we haven't seen now in about 25 years, 9.1%, almost 9% for the year. Now, inflation, we do want a little inflation, so Fed wants to see 2 to 3%, but this is what has folks concerned, and the impact for us is a rising cost of goods and services, which impact our donors. But more quickly, we're going to see that impact in the cost of providing ministry. The other is on the lending side, and that is If you have borrowings, they're going to get more expensive. Your loans will be repricing at higher rates. If you're looking to for a new loan, the underwriting standards are going to be a little bit higher. Churches are looked at with more scrutiny today than they have been in the past because a higher number of defaults and church closures. But if I were going to walk away with one thing, it would be this: that there's a lot good still occurring in the economy. The negative is the 9% inflation that we're enduring right now. And so, if I am a church leader, what I am thinking about is on average, it's going to cost 9% more next year just to provide the same level of ministry impact that we're experiencing today. So you need to be thinking in terms of growing your giving by 9% just to stay even.